Traders, traders, welcome. All right. Welcome, traders. Welcome. Another live session. Oh, yes. Live Q&A with Oliver Velez. My name is Oliver Velez. And let's do this. All right. It's been a while, guys. It's been a while, and I've actually missed you. I've missed doing these kind of open forum live Q&A sessions. I like to kind of hold these, guys. I like to try to hold these live Q&A sessions. I would like to do with a greater degree of frequency because I know that despite the fact that we make sure that there is something of value distributed to you every single day on this channel and all of my channels. I know that, there might be questions that pop up as it relates to some of the content that I'm sharing with you. And not having me present or available to deal with those questions in a timely manner, is a little bit of a negative. So I do want to have these Q&A sessions a little more frequently. And while I can sort of type answers, there's nothing that beats me being able to address what's on your mind, what you're thinking about, what you're experiencing, what you're going through, and in a live forum. All right. I can spontaneously pull up a chart. I can show you visually exactly what I'm saying. And the text version of an answer, while it's better than nothing, pales in comparison in terms of the value that we can do right here. So I'm glad that we're able to do this today. All right. So, and I hope that I've given you enough advance notice here to be able to grab your questions or prepare them in advance for me. All right. So listen, you can ask anything that your little heart desires. Of course, I prefer it to be market trading specific, but you can ask anything your little heart desires here. All right, just so you know. Now I'm going to pull something up here. Give me just a moment here. Yes, here we go. Boom. All right, just want to make sure I have that handy. All right, so guys, what's on your mind? Talk to me. What is on your mind? I want to hear it. I want to know what you're going through here. All right, IK says, I'm wondering if I can get this. I'm experimenting with a few things here, guys. Let me see something here. No, doesn't seem to be working. That's okay. IK is saying here, I correctly predicted this up move. Where do you see markets going? Oh, wow, why did that switch there? Where do you see markets going in the future? IK, I have to admit that you are right. And I hope that doesn't come across as being too egotistical in any way. But when a lot of the world was quite negative and bearish on markets, I called for an everything new high market environment, but first after a sharp drop. And what I told you in a variety of my live sessions here is that the plan was to talk markets down, to freak out markets to the downside for a variety of reasons, which we experienced in the first quarter or so of the year, into the second quarter of the year. The current administration in the States was trying to really talk the markets down and freak the markets out with tariff announcements, the tariff scare and things of that nature. And there was a very big reason for that because there was a lot of treasuries coming due, and with the fall off in international purchases of U.S. Treasuries, there was a goal to force U.S. dollars currently sitting in the stock market to come out of the stock market and go to what has traditionally been the safety haven of the safety haven when during times of uncertainty. So this is important to understand. Listen to me carefully. When the financial world is in a risk on environment, more money leaves safety and goes further and further out on the risk curve. Stocks obviously represent a riskier part of the curve. Okay. Some people then consider Bitcoin one of the riskiest part of the curves. But you leave safety and you go out further and further on the risk curve when you're comfortable. When you're not comfortable, you start pulling money back out of the further risk curves into that pocket of safety. What's the pocket of safety for the world, or traditionally has been the pocket of safety for the world for the last several decades? It's U.S. Treasuries. So because there were many U.S. Treasuries coming due and or new refinancing through U.S. Treasuries, there was an attempt to pull the money out of risk assets to have it automatically flow into these new treasuries, U.S. Treasuries being issued. My thesis was that after that was accomplished to some degree, and I don't think it was as successful as intended, but once that was over, you would see an easing of the tariff narrative, and you would see a calming of markets, and then money would start leaving that core safety position and going back out further on the risk curve. And that's exactly what's happening. That money flowing back into the risk curve has pushed most markets to all-time new highs. Now, the question is, where do I see things going? Well, I don't think that we're finished with this new all things, everything new high. I feel almost sorry for the bears who think that we're in for some dramatic collapse, some worldwide global meltdown. If that is in our future, it's not in our immediate future as far as I'm concerned. We're going higher. Not maybe a pause here is due because August and into the early part of September is seasonally a very weak market for financial markets, not every year, but most years on average. So we could get a reprieve here. We could get some softening. We could get some weakening. We can get some pullbacks. But latter part of the year, we're talking late September, October, November, I think everything is on frickin' fire. I think that the latter part of this year is going to present opportunities that are bigger on average than historical opportunities have been presented before. And this is one of the last opportunities for what I would consider to be life-changing opportunities. I think they pop up for us in the latter part of the year. I think that we can position ourselves to take full advantage of this now until that period comes. But mark my words, this is going to be recorded. I want you to bookmark it. I want you to remember it. I want you to hold my feet to the fire and watch what unfolds in the latter part of the year. My traders are positioned for it. All right. My wealth traders are positioned for this. All of my traders are positioned for this because I've been pounding the table on it for so long. So far, everything is playing out according to the book, and we are going to experience face-melting moves to the upside. But you have to know how to squeeze every ounce of opportunity out of that. You can still play it wrong. You can still have the wrong strategy, the wrong approach, the wrong duration. and the wrong timing. And so I'm excited for it seems as though all the stars and the planets are aligning for one of the most bullish periods in recent financial history. Now, what comes after that might be somewhat ominous. What comes after that might be some hard times from, for lack of a better phrase. But that is not what we should be thinking right now. All right. Bears are going to get crushed or continue to get crushed because they're being crushed right now. All right, guys, what else here? Let's see. What else you got here? What else do you have? Boss, can you send greetings to API Colombia? I hope I'm not butchering that name, but yes, Colombia, my home, my country. I love you. All right, love you guys. Let's see here. How and where to play color changes. This is coming from Teluga Trader and Traveler. How and where to play color changes. This is probably one of the most overlooked concepts that I'm constantly trying to teach you. And I know why. I'm going to show you this on some charts right now. But I know why it's overlooked as if it's not that meaningful. It's because it's too simple for people. But what you have to understand, guys, is that simplicity houses power. As you go further and further out into the world of complexity, the complexity actually depletes the power. The most simple things, not only in trading, but in life in general, are the most powerful things. Simple, not a lot of moving parts, doesn't require a tremendous amount of mental power and mental calculation. The most powerful things are simple. And so this trader's asking me, how do you find color changes? In a way, I don't understand this scenario, but the question, because color changes are very basic and simple. But I'm glad the subject was brought up. So let me show you something. I'm going to take you to a chart, and I want to show you how I use this simple color change concept today. All right. Just want to make sure you see me here. Yes. I want to show you how I use this concept today to make a little bit less than $8,000. $8,000 basically on 2 trades, but in the same trade. And I'll show you this. It was done on Google, Googl, so CL shares. And I'm going to go to a 2-minute chart because most of you who followed me for any period of time, you know that we trade the majority of the time off of the 2-minute time frame. Every bar represents 2 minutes of 2 minutes of trading. The 2 moving averages you're looking at are simple moving averages, and I don't look at a chart without them. This is the 20-period moving average, and here is your 200-period moving average. And your time frame is the 2-minute chart. So every bar represents 2 minutes of trading. Now, I'm always telling traders that if you trade the open, you must use the latter part of yesterday to find your base. So this is the base from the latter part of yesterday. You have to know where your base from yesterday is, okay? And in the space above the base, this space I like to divide into 3 parts. So it's 1, 2, and 3. Now, from space 1, you want to predominantly go long on color changes. From space 3, you predominantly want to go short on color changes. Okay? I hope you've got that so far. So we trade by the numbers. Now, I want you to take this base from yesterday, the late day base from yesterday. I want you to extend it into the future. Okay, like that. Now remember, we got 1 plus 1, category or zone plus 2, and category or zone plus 3. We want to predominantly go long from 1. You can go long and or short from 2. That's both valid. But you mostly want to go short from 3. Okay? That's trading by the numbers. Now, watch this, guys. All right? I want you to watch something. I want you to watch how powerful this, how simple this is. Give me a second here. I want you to watch how simple this is, but yet, just want to make sure I've got this right here. All right, got it. All right. How simple this is, but how powerful it is as well. All right, so watch this. So, what's a color change? If I want to go short, I'm looking for a green bar to be wiped out by red. Boom! This scenario is green, is red overpowering green. How does it overpower green? By breaking the low of green. If I'm looking to go long, I want a color change in the opposite direction. I am looking for a red bar to be overpowered by a green bar. Boom. How does it overpower it? It trades above the high of the red bar. So this I'm betting this way, this I'm betting that way. But it's not as simple as just any color change. You have to combine that with location, right? So this is where position and location comes in with the numbers. From 3, I want this scenario. You see? From 1, I want this scenario. So let's take a look at the numbers. Let's take a look at those scenarios with the numbers. Now, Google starts trading right there at the open in the 3 category. But in the 3 position, I want to bet down. Okay? But in order to bet down, I want green, I want to see green, and I want to see red break green. Boom! And I want to get in right there. That's my entry right there. Boom, right under the green. That's the color change. I'm looking for a change from green to red. It's quite simple. A color change from green to red. And so, what you have, and I'll take this away. Here's your green. Sorry about that, guys. Here's green. Green forms. That's a 2-minute bar. And the next 2 minutes, boom, it wipes out most of the green, and I'm going into the trade right on the break of green, right there. Boom! That's a beautiful short position. Right there. Now, I'm going to protect myself. Okay? I'm going to protect myself by putting a stop above the green. So it's really the break of the green that I'm playing. So if the green bar is really my trigger event, the break of the green bar is my trigger event, then my event is really the green bar. The breaking of the green bar, I'm going to put my stop above my event. I don't want the very reason for my trade to be eliminated. My reason for the trade is green is being broken. So as long as the stock stays within the range of the green, I'm fine. But if it takes my green bar out again to the high, I'm killing the trade. Okay? So my stop is there. And from here, I can continue to play color changes if I want to. What's my target? Well, the potential maximum target is you go from 3 all the way back to 1. All right? So from position 3, short all the way back to position 1. Okay? That's the ultimate goal. But I tell traders you can go for the ultimate goal. You can get in on position 3, but you also probably want to take somewhere in the middle. All right? So don't be greedy. Take some on the middle, keep some in, and see if you get all the way back to position 1. Okay? Does this make sense so far? I'm curious. I'm going to keep going, but I want to make sure. Let me know, guys. Does this make sense so far? Let me know. I want to see your comments below. Does this make sense? This a little too bright here. Am I making sense right now? Trading the numbers. 1, 2, 3. From 3, betting down on the color change. From 3, trying to get 1, but taking profits in the 2 position as well. So 3, 2, 1. Color change at 3, profit take at 2, profit take at 1. Make sense so far? I know we're on a delay, so I'm going to wait for your responses here. Let me know. Talk to me. Talk to me. Very clear. Good. Fantastic. Great. It's trading by the numbers. Guys, it's not rocket science. I keep telling you this. This is not rocket science. It's not freaking rocket science. This is colors. Red bars and green bars, boys and girls. 1, 2, 3. 1, 2, 3. Red bar takes out green bar. It's trading by the colors and trading by the numbers. You just have to know how to do it. All right, so let's go back. Let's go back here. Yes, boys and girls. Red bars and green bars. Okay. So let's do this again. I take the short under the green. Boom. I take a quick profit just to put something in my pocket here. Now, what I take, so let's say I went into 5 lots here, and I take off 2 lots here. I'm going to put those lots back on the next color change. So as I bounce higher, where's the next time you see green taken out by red again? Boom. That's what we're looking for, right? And you see it right here again. Boom. I go back in with the 2. You understand? And you can literally keep doing this. When's the next time? Red takes out green right here. Boom. Red takes out green right there. Boom. All the way back to position 1. And I'm telling you, people, a 12-year-old can do this. I know. I have 800 trading kids from the age of 10 to 15 doing this all year long. My Trading Kids program. They're trading by the numbers and they're trading by colors. And guess what? They're out trading you because they're not overcomplicating it like the adult mind tends to do. Under the green, boom, enter. 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 Take profits at the numbers. 3, you enter. Take profits at 2. Take profits at 1. It's as simple as that. Take profits at 2. Take profits at 1. I don't know how to make it simpler than this, and I don't know how to get you to do it. Unless you just join me and I just keep pounding you every day, showing you. I show my traders every day. They watch me pull money out of the markets every day using the very same simple but powerful concepts. I'm drilling here and with them on a daily basis. So that's what a color change is. Now, if you wanted to think about going the other way now that you're back at position 1, you're looking for this color change. You're looking for, when does red get devoured or taken out by green? When do you see this near position 1? Right here. Boom. There is, boom. There's your color change buy in the right number. You understand? And when are you, remember these numbers, guys, right? 1, 2, zone 2, zone 3. All right, it's a zone, right? So when are you're taking profits somewhere up here in zone 2, around zone 2. You might get all the way back to 3, maybe not. That's why you always want to take profits in the proper zones. In the very next zone, take a profit. You might get to 3, maybe not, but at least you took some profits in zone 2. This is color change trading, and this is trading by the numbers. Simple, powerful, effective, and oh so extraordinarily profitable. That's it. That's what it's all about. And if you're interested in seeing that, there it is. I don't know if you can see it clearly, but there it is. Google, $7,556 on that trade. Right there. Boom. So again, guys, these are the types of things that I am constantly honing in on, keeping your face there, keeping you focused on the simple but powerful things. Sometimes these things are so simple that people tend to, as humans, we tend to almost, I didn't pull the screen up. Is that what happened? Let's see. That work? Let's see. Let's see if that's working here. Yeah, that's it. So we tend to, there's the Google right there. There's the P&L, 7,560. But I don't know if you can see that. The text might be small. But, you know, there's this tendency on the part of humans to believe that if it's not complex, it's not effective. And this is very, very wrong, people, very wrong. Get a little bit more light here. It's very wrong to actually think that. It's really the reverse. Over complexity decreases power in almost anything in life. And so I don't want you confusing simplicity. Don't fall into this mode of, well, it can't just be that easy, Oliver. 1, 2, 3, red bars, green bars. Yes, that's all there is. There's events, color changes, in the right locations. And that's how it is in everything. Real estate, there's a good sound house event. Where? In the right neighborhood, in the right city, in the right zone, in the right zip code. It's all the same. You know, crappy house in the right zip code, okay, not the most ideal, but still might work. Crappy house, poor event in the wrong neighborhood, you're not getting value from that. So, I teach you these concepts based on proven, these are proven things in almost every area of business, not just trading. Event and location, event and location, event and location. How many people in the world do you think are sloshing around the markets with their family's money and they understand location? Very few. Most of them don't even have events to play. They play feelings. And they play thoughts. I think that's what they play. That's their event. I think, oh, that's your event? Oh, what a sound event that is. You think. I think it's going to start going up from here. That's your event? That's your tactic. You think? I feel it, Oliver. I feel the market's going to turn here. Oh, that's a very, very sound technique. I like that. You feel, right? That's what the majority of people are doing. They have nothing specific. They have nothing detailed. They have no process. They have no technique. They have no events. They don't know location. They don't know probability analysis. They don't know where to take profits in the zones. They don't know zones. It's crazy. And this is why the entire system, you know what it's designed to do? Is to bring new depositors to the game every single day, because the average lifespan of a depositor is relatively short. Okay? So think about it. The average the average trading account lifespan is very short. And so you have to keep the marketing machine going to bring fresh new people who are going to deposit into their Robinhood accounts, into their Charles Schwab accounts. You need a fresh new supply all the time, because this wave of depositors already lost their deposits to traders like me and some of you, and they're gone. And you need a fresh supply of depositors. My goal with you is to have you leave the world of being a depositor. You should never make a deposit into this game. Why? There are depositors and there are takers. That may not make you feel good about yourself in a way, but that's just the way the world works. Winners don't deposit. You understand? The depositors are depositing money for you. You're not supposed to be the depositor. If you're playing this right, you don't deposit, you withdraw. That's why I often call it ATM trading. All right. When I open the charts, do you look at 2-minute time frame only, or analysis all time frames? Well, it's predominantly the 2-minute is what I call my battle time frame. But there are other time frames. I refer to the 5-minute, the 15-minute. I glance at the daily time frame. Part of why I felt so confident with Google's short today was because the daily was so overbought, right? So if you look at this, I can show it to you again, right? If you look at the daily time frame of Google, I want to show you this. So we have this thing called an I teach my traders this thing called an exhaustion gap, right? An exhaustion gap. So what it is, I'll demonstrate it to you in a drawing. An exhaustion gap is this, where you run up and you leave behind your two key moving averages. See these moving averages? All right. So you leave them behind. So you leave your moving averages behind, you almost go vertical, and then you gap from this position. So the gap from this vertical, now look at your moving averages are down here. You see? So you've left your moving averages in the dust. You've gone almost vertical, and then you gap from that vertical scenario. So here you leave your moving averages. I'll do this in a different color. You leave the key moving averages. You almost go vertical here, and then you gap right there. So this gap, remember that red bar wasn't there. I shorted before that red bar was there, right? So you're gapping away from this vertical scenario. You're already vertical before the gap. You're already extended away from your key moving averages before the gap. Okay? So this is called, what I teach my traders, we name this an exhaustion gap. Do you understand? It's exhausted from running to the upside, and in one fell swoop, it just gaps into the finish line. It leaps into the finish line right here, and usually these drop. Now, why do exhaustion gaps have almost it's like an 88%, 85 to 88% reliability rate of dropping? Why? Because I'm going to explain this to you very carefully. If you owned Google from this color change here near your moving averages, right? If you owned it and you were holding it, and all of a sudden, in one day, you're deeply in profitable territory from here. You're deep in profitable territory, deep in profitable territory, deep in profitable territory. And then this morning you get an instantaneous, without even trading, massive additional gain. It didn't trade there. It just opened there like a freaking gift. All the traders from here, all the holders from here are going to pare down their position here. They're going to immediately take the profit. They're going to immediately pare down their position, causing weakness on this exhaustion gap. Boom. So exhaustion gaps lead to gap and crap scenarios. This was a typical gap and crap. But you gotta be extended away from your key moving averages for this to have high reliability. All right? You can gap like this one, but not so far from your key moving averages. But when you gap up here, you're in Pluto land, bro. You're falling from Pluto up there. So I love to short from Pluto land. You know, I love to short from Pluto land. Hope that makes sense. All right. Anwar says, can we go over XOM today? Failed GBI twice and later realized it was going in the opposite direction. I can take a look at Exxon for you today. Let me do that. You can take a look at that. Go to the 2-minute chart here. I'll bring up the chart. Give me a second. And we'll go right there. Okay. Yes, I actually covered this with my traders this morning, because a few of my traders did get stuck in this, and I understand why. You had this nice, beautiful drop from the 200 period moving average, which is typically has a very, very high follow-through rate. So whenever you have like a 200 and then your stock drops from the 200, the odds of additional red after bar one is very high. It's like 90%, which is really wild, right? It's 90%. Give me a second here, guys. Give me a second. So the odds of additional follow through after bar one from the 200 is very high. But as you can see, Exxon had zero follow through almost. You see? Now, when the 90% follow through odds doesn't happen, you have to think the other way, and think the other way big. What is highly reliable, if what is highly reliable doesn't happen, you're going the other way big most of the time. All right. That's something that I wanted my traders to understand. Trying to get this light right here, guys. In a second here. That's what I wanted my traders to understand. So what I explained to them today was, whenever you have a scenario like this, you got to think color changes. All right, you got to think color changes. And how do you think color changes? Well, if your stock takes out 2 red bars, you got to kill it. You see, you should be doing this. This should be doing this. But if green takes, instead of doing that, I'm going to demonstrate this for you. So instead of following through, it does something like this. Goes down again, but still doesn't follow through, and goes up again. If this now takes out 2 red bars, look, here's one. It took out this red bar and this one, 2 to the left. That's called our 2-color stop rule. That is a specific thing that I teach that's in my trader's trading plan. If you take out 2 of the bars that you want red to follow through, but green is taking out 2 of them, you got to kill the trade right there. Kill the trade. Now, if we go back to here, you'll see this 2-color takeout stop. So some of my traders got in on this bar. Boom, they're in that bar. Now, another red bar tries to follow through and doesn't. Another red bar tries to follow through and doesn't. So 2 red bars get taken out. This one took out this one and this one. I'm out of the trade. It's a loss, but at least it's not that kind of loss. You got to know how to lose too in this game. You got to know when what you played. Guys, here's something really, really key, right? Here's something really key, guys. Check this out. When does your trade stop being your trade? Some of you are holding on too long to trades that started out your trade, but they're not what you traded now. You understand? And you're holding them. Now you're in hope mode. When does your trade stop being what you chose? I chose a red elephant bar off the 200 that was supposed to follow through. Now it's not following through. So at what point is it not your trade anymore? And it's a very important question that you have to get good at, because if I play A scenario and A has become F scenario, why should I keep it? That's not what, I wasn't in it for F, I was in it for A. But most traders don't even know how to mark the moment their trade is not their trade anymore. And these are important things to have under your belt, guys. This is part of masterful trading, right? All right. What else here you got? Do you quantify the extent of the gap using, say, Bollinger Bands? No. I'm not saying that can't be useful at some times. Guys, I'm just not an indicator guy. My charts will never look like a bowl of spaghetti with lines all over the place, squiggly lines, and when this line crosses that line, that. I don't do that. A large part of that is, I started as a NASDAQ market maker. I mean, what got into my DNA early in my trading career is just looking at raw trading data. I can tell you just looking at the raw data, what people are experiencing. At the end of the game, you're playing people. You're not playing a stock. Many of you are still forgetting this. We're playing people. A stock certificate, Apple stock certificate, sitting on your kitchen. I know we don't get stock certificates anymore, but we used to. But the stock doesn't move on Sunday. That stock certificate doesn't have a life. Its movement is when the market opens and people start making decisions, start sloshing money around, moving it around, transferring it here to there, buying it, selling it, whatever. That's what you're playing. The veil is the stock price movement. That can trick you. That can trick you by just thinking that the stock itself has a life. I'm thinking people. So when Google has run up huge over the past 2 weeks, and today gaps up huge, making all the traders that are in Google from the last week and a half, very profitable. I know what they're going to do this morning. They're going to sell. And I'm going to join them by shorting. I'm not playing Google. I'm playing them. Do you understand this? Somebody let me know if you understand this. When I'm entering Google short, I'm not thinking of Google. I'm not thinking of their employees and their earnings. I'm thinking people. I know what they're going to do this morning. They're taking that money. I would, you would. Does that make sense? We're playing people. And so indicators don't give me that people feel as much. You understand? I don't need them to understand what traders are going to do at this point right now. You know? Yeah. So I'm not a big indicator guy. I've tried them all. I have. But I don't need them. And remember guys, what I find with most people who rely on a lot of indicators to do their trading, make their trading decisions, these indicators gradually, and sometimes not so gradually, they take your attention off the very thing that matters, which is the price activity. Here you are looking at this squiggly line, and you are no longer looking at price activity. And it's the price activity that makes you money or loses it. So it's got you looking over here, and the price activity is over there. So I teach a pure price. Go to the heart of the matter. Do you understand? Go to the essence of it all. Why do I want I want the indication? If you want me as your mentor, right? Do you want the indicator of Oliver? Or do you want Oliver? No, Oliver. I don't want Oliver. I want the indicator of Oliver. No, you want the authentic thing, You want authenticity. Who wants a second or third hand item? I don't need you to tell me about the stock. I've got the stock. I don't need you to indicate when I can see it. So I'm just not one, I'm not one of those. Yes, all right. What's your thoughts on Bitcoin for the end of the year, Sir Oliver? Huge. My thoughts on Bitcoin. I think we are much, much, much higher by multiples. So I'll just put it that way. I would not be surprised to see us broach 400,000 by the end of the year. That's right, this year. 3s, 4s. And, when I tell people this, they think I'm crazy. Some people think I'm crazy, but, they don't understand that all of this is very normal. and quite historical for Bitcoin. Bitcoin tends to, and let me show you this, guys. I will show you this. If you'll allow me, I'll show you. Or we can do some simple math and I'll show you how we get here, and you'll understand where my mindset is. I don't mind sharing it with you. Okay, let's get back to the charts here. Give me a second. So we take Bitcoin. I want to show you from the weekly time frame here. Now, if you look at, this is where we are now. All right, it's very, very powerful, very bullish. Now, if we go back to the last cycle, Bitcoin operates in 4-year cycles, right? Based on its halving event. Bitcoin 21x'd from this low. So here was the all-time high in 2017. You always tend to make the ultimate peak in an odd year with Bitcoin. So it's 2017. And 1 year later, late 2018, you tend to make the bottom. So the top tends to happen in the odd year, 2017. The bottom tends to happen literally 1 year later. So this is basically November, December to November, December of the following year. Now, from this was 3,200. Okay, that low was 3,200. This 21x'd to the high. It's a 21x from 3,200 to 69,000. Okay, so we take the low and see last cycle we 21x'd from low to high. And then we went through the same thing again. We top out in the odd year. So look at the odd year. The odd year is 2021. So we top out in 2021. When do we top out? November. Same thing. When do we bottom? November, 1 year later, November 2022. It's like freaking clockwork, right? So we top out November 2021. We bottom November 2020. Now, this bottom was 15,600. Let's round it to 500. Now, if we were to 21x again from here, just like we did last cycle, where would that put us? You know, you got to do the math. Now, let's quickly do the math. This is nothing out of the ordinary for Bitcoin. 21 times 15,500. All right, that would put us at 325. That's if we just did what Bitcoin did last cycle. But see, here's what you have to understand, people. All right, I want to show you something. Here's what you have to understand. You see, last cycle, Bitcoin didn't have institutional adoption. It didn't have spot Bitcoin ETFs. Last cycle, Bitcoin didn't have corporate treasury companies coming into play every single week, buying billions of dollars of Bitcoin. Last cycle, we did not have regulatory clarity. Last cycle, we had a hostile SEC environment. We had a hostile administration. Last cycle, we did not have the president of the United States being a pro-Bitcoiner. Last cycle, we did not have an executive order for a strategic Bitcoin reserve. Last cycle, we did not have stablecoin bills being passed. Last cycle, we did not have senators vying for senators and state representatives vying for strategic Bitcoin reserves for their state. Last cycle, we did not have other nation states coming on board the Bitcoin train. It goes on and on and on. We're at the beginning of something that is far bigger than you and I can wrap our minds and hands around. And so, if last cycle, without all of these things, Bitcoin 21x, and did a good portion of that in the last year, we're in that last part of the last year, where Bitcoin went from 10 to 64,000, right? That's a 6x from 10,000 to 64,000 in a relatively short period of time. If Bitcoin did that without all of these things, what is its possibility with all of these things? So don't poo-poo this. We could see 400,000 Bitcoin by November. Now, August and September, as I mentioned to you earlier, August in particular, September a little bit less, but August in particular is a soft month. September continues the softness, but latter part of September is typically when you start to see the improvement set in, and then October and November, and a lot of times right into December, you're off to the races. And this is the type of asset that can double in a week. You've seen this before. It can double in a week. It can double twice, 3, 4 times in a month. So when it goes, it goes. And what a lot of people don't understand about this asset, people, this commodity, or whatever label you want to give to it, because it's really not one thing, it's everything. But what's amazing, what is peculiar about this asset is it is the best performing asset the world has ever known by orders of magnitude. Like, we're talking about in first place so far that second place thinks they're in first place because they can't see first place. It's that far ahead. Where the NASDAQ thinks it's number one. The NASDAQ is still reported as number one, which is silly because it's Bitcoin and it's by orders of magnitude. But here's the thing. All of those spectacular gains, hundreds of millions of %, they all came in 8 to 13 days out of every year. Now think about this. I need you to think about this. The best performing asset the world has ever known that has produced hundreds of millions of % over its lifetime. It's done all of that on average. It's produced almost all of that in only 8 to 13 days on average every year. So its gains are compacted into a small number of daily bars. And this is what frustrates so many people that can't muster up enough patience to give the best performing thing its due time. They get frustrated because they bought the top and now it's not one of those 8 days out of the year. You're going to have to wait a while for it. But not knowing these things, this lack of knowledge, has millions of people misplaying this. When you know these things, you can use them for your family's wealth. You understand? Knowledge is power in this regard. So you think about it, 90+% of the time, Bitcoin's not doing anything. But those 8 to 13 days out of the year, OMG, wow. And it trounces everything. It trounces everything. All right. So yeah, I do think that we are much higher, and we're coming into probably the most bullish period, maybe in Bitcoin's history, which is crazy to even think. But we'll see. We'll see if I'm right. So guys, look. Oliver, quick question. Do you use level 2 data when you're trading? No, I used to be a heavy level 2 data trader back when it was relevant. Level 2 has long ago become basically irrelevant. And it's comical in one way and sad in another way when I see people teaching traders to read level 2 data for their trading. It's like, oh my goodness. Wow. You see, people, things radically changed over the years. When I was relying on level 2 data for certain trading decisions, the data was true. And what I mean by that is that every single move of a market maker was visible. Every single transaction popped up and you saw it. You saw every move by Goldman Sachs. You saw every move by Morgan Stanley. You saw every move by these people. But they got the laws changed or the rules changed where they could go dark. So you started to lose the ability to see what Goldman Sachs was doing. ECNs came into existence, electronic communications networks, that became the facades behind which these operations began to hide behind ECN networks. All right, electronic communications networks. These ECNs fractured the market. In addition to that, rules started to allow dark pools and gray pools of liquidity from operating so that now institutions could push their trades to a dark pool that would not even show up on level 2. And the vast majority of big moves that matter are all done dark, guys. Dark and gray pools of liquidity. Now, even the platform that I trade on, we have access to 15 dark pools of liquidity, which means that we can throw our orders and no one in the world knows where they are, what they are, whom they're from. So now, with the majority of your most relevant volume data invisible to everyone, what you see on a level 2 is meaningless. The meaningful data is gone. And this is not new. This is since the early 2000s. So whoever's teaching this BS is 25 years late. It's crazy. 25 years late teaching that nonsense. It's crazy. All right, guys, I want to show you something here. I want to show you something. I want you all to I want you to come here, guys. This Saturday, another masterclass. I want you to be there. All right? If you've got 2 hours, an hour and a half, 2 hours, I promise you, it's going to be one of the best 2 hours of the year so far. So what I'm going to talk about Saturday is I'm going to talk about some strategies to deal with chaos, because while I think that we're going to crazy new highs, but it's going to be chaotic. So it's not going to be smooth. It's not going to be a give me. It's going to be chaotic. So I want to talk about how you handle a chaotic market. You have to have this skill. You have to have this ability. Otherwise, you're going to always live a trading life where you take 2 steps forward, 2 steps backwards, sometimes 3 steps backwards, because chaos, a lot of times, if you don't know what you're doing, will take all of your good work away from you. And some of you are probably experiencing that now. You're having these great stretches in your market play, and then boom, one chaotic period wipes everything away. Am I right? I know I'm right. So we're going to talk about, how do you profit through chaos? How do you recognize chaos? Can you know when a chaotic period is upon you or coming upon you? And are there certain things that can actually turn a chaotic period into a profitable period for yourself. So we're going to talk about chaos. And what I try to do with these live sessions, guys, is I try to do them in a timely manner, meaning that because I'm thinking about this, I want to try to prepare you for what I'm thinking. I'm thinking a powerful move to the upside is in front of us in all markets, but it's going to also be chaotic. So we've got to be able to handle that. So I'm going to be talking about that specific theme on Saturday, and I want you to be there. It's absolutely free. Make sure you register for it, guys. Registering is very important, please, for me. All right? And I'm hoping that I can get you there. I think it's already set up on the channel here. All right? It's obviously in Spanish on my Spanish channel and my Portuguese channel as well. So I'm looking forward to you being there, okay? All right, guys, I love you to death. I'm going to head out now. I got to go. I think someone's knocking at my door, guys. But I love you to death. Thank you very much for showing up on such short notice, okay? Boom.